Does fractional reserve banking cause inflation? Have you ever wondered how banks can lend out more money than they actually have? This practice is known as fractional reserve banking. In simple terms, banks keep a small portion of deposits in reserve and lend out the rest. This ability to create new money through loans can impact the economy in various ways. Now let's consider the question, does fractional reserve banking cause inflation? To answer this, we first need to understand inflation itself. Inflation is when the overall price level of goods and services rises over time. It can happen for many reasons, including decisions made by central banks, economic growth, and even disruptions in supply chains. From a conservative viewpoint, particularly among Republicans, the connection between fractional reserve banking and inflation is often discussed. Some believe that because banks can increase the money supply through lending, this could lead to higher prices, especially if the economy is booming. However, others argue that fractional reserve banking is not the main reason for inflation. Central banks, like the Federal Reserve in the United States, play a key role in managing inflation. They can control the money supply by changing interest rates and buying or selling government securities. These actions have a more direct impact on inflation than the practices of fractional reserve banking. In the context of free market economics and fiscal policy analysis, many conservatives stress the importance of limiting government intervention. They argue that while fractional reserve banking can help stimulate economic growth by increasing the money supply, it is the actions of central banks that more directly affect inflation rates. If fractional reserve banking were to cause inflation, it would likely be through the increased money supply leading to higher demand for goods and services. This could push prices up. However, this effect is often balanced out by the business cycle and the measures taken by central banks. In summary, while fractional reserve banking can contribute to a rise in the money supply, it is not the primary cause of inflation. The responsibility for managing inflationary pressures lies more with central banks and their monetary policies. From a conservative perspective, the focus remains on minimizing government and central bank intervention to allow market forces to guide economic activity.